Stocks step up gains with advances outstripping declines amidst continuing uncertainties on trade and tariffs. Realty and healthcare are the big gainers, while the PSU banks are the big drags. CNBC-TV18 learns that the RBI is internally considering allowing foreign financiers to own higher stakes in Indian lenders than the current limit of 15%. The move follows overseas interest in IDBI Bank. Industry experts have warned that automakers may need to halt production of electric vehicles if the issue over supply of rare earth magnets from China is not resolved by July. EV four-wheeler makers could be the worst hit. The government is likely to propose to switch to a three-slab structure in the upcoming GST Council meeting. Sources tell CNBC-TV18 that the centre is likely to propose the GST Council to consider doing away with the 12% slab. And Elon Musk unleashes a social media campaign rallying Republicans to kill the big, beautiful Trump tax bill. He sees the bill undoing everything he was trying to achieve with Doge. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia, and it is a pure expiry session that is playing out currently for the markets. The Nifty at one point tested levels of 24,900 just a few minutes earlier and has now come off those highs, 24,899. So that is a new high for the week that the index has made. And since then, in the last few minutes, it has come off 100 points from those levels. Yet the index holding on to gains of around 170% was 170 points, beg your pardon, was meandering around that 24,750, 700 range, and since then it saw a big up move post noon, and since then it has come off those higher levels as well. So 24,900 being a bit of a barrier for the index. Of course, it is expiry, so the second half of the session also promises to be equally volatile as the last few minutes have been. The Nifty Bank too has been trading in a very narrow range in yesterday's trading session, and that too has seen a bit of a spurt and has come off from those highs, crossed that 56,000 level briefly, but has not managed to sustain at those levels. But CNBC-TV18 has learned that the RBI is internally discussing whether to allow foreign banks to have a higher shareholding in Indian lenders. The current limit is 15%. Now, the internal RBI discussions are on to raise this limit. Lata has more on this.
Yes, that's right. What we are picking up from sources close to the Reserve Bank, who were formerly very in the Reserve Bank, tell us that discussions are on internally to check whether this limit needs to be raised. At the moment, as you said, the limit is 15%. And first, everybody in RBI will have to come on the same page, and then they will probably put it out for a public discussion. So until now, it is really at a preliminary stage. Now, incidentally, Reuters has also reported today that Reserve Bank is signalling possible, that is their words, signalling possible rule changes ahead that would let foreigners own more of India's banks. Now, as I told you, the current limit is 15%, but there are two major cases where an exception was granted. One was Fairfax allowed to own 51% in Catholic Syrian Bank from a long time, and more recently, SMBC, Sumitomo Bank, has been allowed to own 20% in Yes Bank. Now, the chances are that the Reserve Bank and the government are also preparing for the IDBI stake sale. LIC and government want out, and there is a lot of interest from foreign banks, and they, even Money Control broke a story saying that one of the front runners is Emirates NBD, and there, of course, nobody would want to come for a 15%. You want to sell a larger stake. That could also be one of the reasons why this thing may be speeded up. I'll just tell you the current constraints. There are a lot of constraints on foreign banks. The first constraint is overall. Everyone can own, any one entity can have only 26% voting rights in a bank. You may own 50%, whether it's Fairfax or SMBC. If they own more than 26%, the voting rights will be capped by 26, and that is not within the purview of the Reserve Bank. This is the Banking Regulation Act. So it is within the purview of Parliament to change it. And we have no information whether they are thinking about it. Foreign banks which come as branches, like, HSBC, Stancy, Citi, they have very severe license restrictions on getting additional branches. But if they come and set up a wholly owned subsidiary, they are treated like any other Indian entity. They can open branches without taking RBI permission. The other big rule governing all this is FPI plus FDI in banks can reach only 74%. That is the other limit. These are all the limits that are already in existence. The only thing that is being mulled is whether to allow foreign banks to go beyond that 15%, to remove that rule. We also try to ask our sources whether generally private sector, manufacturing and other companies will be also allowed a greater stake. We were told that that is not up for discussion.
Lata, thanks a lot for that. Now, China is refusing to ease its stranglehold over its supply of rare earth magnets, and the Commerce Ministry also just put out a clarification a few minutes earlier saying that it is not targeted towards one specific country. But now this has become a cause of concern for the global electric vehicle ecosystem, but is rankling the Indian EV makers as well. Now, leading electric vehicle companies including Bajaj Auto, TVS Motors and Tata Motors have told us that the situation is concerning and it has the capacity to bring production to a grinding halt. Now, China accounts for 90% of the world's rare earth magnet supply and is a critical component for manufacturing electric vehicles.
The whole supply chain of the world resides in China. So if this is true, we are still trying to come to terms with the facts, all the facts. But if this is true, it would mean that, and if it doesn't change, then in a matter of weeks, the entire Indian EV industry will grind to a halt.
I would be wrong in saying that we don't have dependence on this. There is dependence. As SIAM president, SIAM as well as ACMA both are very closely interacting with the government. Government has been very supportive on this issue, in terms of reaching out to the Chinese government also, the relevant ministries there. And we hope that the issue might be, taken care of.
This EV supply chain disruption is certainly going to pose a short to medium term challenge. And I think as India plans its EV strategy and EV plan, the adoption will have to be phased in or phased up, along with developing an Atmanirbhar supply chain in India, where India, as the world's leading two-wheeler market, which has produced 3 of the top 5 companies by volume globally, has its own supply chain, its own R&D, its own capability, and EV is really built on that basis.
How a trigger for our markets is going to be the RBI policy decision tomorrow, and a CNBC-TV18 poll is suggesting that this time as well there would be a 25 basis point rate cut. Ritu is here with the key expectations.
We're going in with the expectation of a hat trick, with the Reserve Bank's Monetary Policy Committee expected to cut rates for the 3rd consecutive time. Now, inflation is tracking well below the RBI's 4% target, and the first quarter numbers are also likely to undershoot the forecast, and so it'll be very difficult for an inflation-targeting central bank to not deliver a cut. Now, while 90% of our respondents to the poll expect a 25 basis point cut in this policy, a smaller section believes a large 50 basis point cut could boost the credit cycle and lift sentiments. The repo rate currently is at 6%, and that is expected to go down to 5.5% in this rate cutting cycle, and that will mark the shortest and the shallowest RBI rate cutting cycle that we've had in over a decade. But a smaller section is expecting the terminal rate at 5.25%. So overall, the market sees space for another 50 to 75 basis points of cuts from here on. Now, most expect RBI will stop the rate cutting cycle by December. Some are even expecting that to happen by August. The GDP forecast for the year, that is most likely to be left unchanged at 6.5%, even as RBI takes note of some of the risks from rising global trade uncertainties. On the inflation front, though, a revision is quite likely, with CPI inflation under 4% for 3 straight readings. A majority of the respondents to our poll expect RBI to lower the FY26 forecast from 4% by 10 to 20 basis points and possibly more, which will support future rate cuts. As for liquidity, most feel RBI has already done enough, and with that record high dividend, core liquidity is expected to stay in surplus in the coming months, so don't expect any big action on that front. But here's what else to watch out for. Any tweaks to the liquidity management framework for one, and there's also been some chatter whether RBI may introduce the external benchmark linked rate, or EBLR, for the NBFCs as well, to ensure that there is better rate transmission. And of course, the street will watch out for commentary on the global macro outlook and how that might affect India. So bottom line is, this is a policy where RBI's rate cut could be predictable, but its guidance and other measures will be what the markets will look at very closely.
Ritu, thanks a lot for that. All eyes, of course, tomorrow morning on the RBI interest rate decision. Take a short break, but just before we do that, we are excited to unveil our brand new global business news channel, the all-new CNBC TV18 Prime, where our once-a-week deep dive into a new industry, a new technology, or a new segment takes place. And this week, the spotlight is on India's drone manufacturing ecosystem. Tune in to CNBC TV18 Prime, 11:30 every Friday for The Frontier. Welcome back. Now, billionaire Elon Musk on Tuesday has plunged into the congressional debate over President Donald Trump's sweeping tax and spending bill, calling it a disgusting abomination. Now, that will increase the federal deficit. Several fiscally conservative Republicans in the U.S. Senate have supported the views that Musk has expressed in social media posts, which could complicate the bill's path to passage in that chamber. Tesla and SpaceX CEO Musk wrote in a post on his social media platform X that this massive, outrageous, pork-filled congressional spending bill is a disgusting abomination, end of quote. Now, American billionaire and renowned hedge fund manager Ray Dalio has called the issue of U.S. debt an urgent matter. In a conversation with CNBC, he said that the U.S. debt issue a supply-demand problem. That is a supply-demand problem. He also suggested a 3% solution to deal with the U.S. debt crisis urgently. Listen in.
It's urgent because we are on the brink of the supply-demand. Just to put it in perspective, imagine you're running an enterprise, a company. You're spending $7 trillion a year. You're taking in $5 trillion. You have a $2 trillion deficit. You have a debt that's 6 times the amount of money that you're taking in. The interest on the debt is $1 trillion. That's 20% of all your spending and 50% of your deficit. And you can't cut the costs materially. You're at this point where as the debt then compounds on the debt and it's squeezing out. There's a path here. I call it the 3% three-part solution. 3%. Get the deficit down to 3% of GDP. Spread it out. That means you probably have to change revenue and taxes, tax revenue and expenditure by about 4%. Squeeze in 4%. And if they do that, they will have probably a 1 to 1.5% decline from interest rates, and that will reduce the deficit by nearly another 2%. And that would be the path. That's what I call the 3% three-part solution. On both sides of Congress, I've spoken both sides, agree on the numbers. And if there's a depreciation in the value of the currency, there's a depreciation in the value of the debt. And because there's a need, because there's this problem and these imbalances and so on, this is a big issue. So the depreciation of the dollar is making, and the expectation of a depreciation of the dollar, makes it less attractive to hold that. While the dollar in the 1970s fell against the alternative currencies, and it's probably likely that this happens again, you also have all the currencies falling in relationship to gold, goods and services, and so on, and then you can have an inflation.
Now, US President Donald Trump on Wednesday angrily urged Federal Reserve Chairman Jerome Powell to cut interest rates minutes after the payroll firm ADP reported its lowest monthly private sector jobs number in 2 years. Now, ADP's report showed that the private payrolls ticked up by just 37,000 in May, well below the forecast that Dow Jones had, which was at 1.1 lakh. Now, it was the lowest monthly private payroll reading since March of 2023. However, Oppenheimer Asset Management's chief investment strategist John Stolfers says that the weaker print and economic data might be the soft landing that the US was looking for.
I'd have to say not necessarily weaker data that should be of overly concern, But we would have to think, much like Sarah was just saying, you've really got, it looks like a relatively soft landing that we're experiencing. And we've been looking for that for ages, because the Fed, raised 11 times, then paused 9 times, began the cuts last September in terms of rate cuts. One cut of 50 bips and then 2 cuts of 25 bips apiece in November and December. We think they're going to cut again probably in September this year. But again, a down payment just to show the market rates are normalizing, maybe 25 bips in September.
Now, adding to a flurry of overnight decisions made by President Trump, the White House has signed a proclamation to suspend the entry of foreign nationals seeking to study or participate in exchange programs at the Harvard University amidst an escalating dispute with the Ivy League institution. Now, the order also directs the U.S. State Department to consider revoking existing academic or exchange visas of any current Harvard student who meet the proclamation's criteria. Now, in another immigration-related move, President Trump has also levied a ban on citizens of 12 countries, saying that the move was needed to protect against foreign terrorists and other security threats.
Very simply, we cannot have open migration from any country where we cannot safely and reliably vet and screen those who seek to enter the United States. That is why today I am signing a new executive order placing travel restrictions on countries including Yemen, Somalia, Haiti, Libya, and numerous others. But we will not allow people to enter our country who wish to do us harm, and nothing will stop us from keeping America safe.
The Russia-Ukraine conflict has taken a dramatic turn ever since Ukrainian drones targeted key Russian air assets recently. In the latest, Vladimir Putin has told Donald Trump that Russia will retaliate against the Ukrainian attacks. Now, the next report tells us more.
Ukraine on Wednesday released new footage of its audacious drone strike on Russian military air bases over the weekend. The footage showed attack drones targeting numerous Russian strategic bombers and other military aircraft in an operation codenamed Spider's Web. Satellite imagery suggested the attacks had caused substantial damage, although the two sides gave conflicting accounts of the extent of the destruction. Reuters reported exclusively, citing 2 U.S. officials, that the drone attack hit as many as 20 Russian warplanes, destroying around 10 of them. The U.S. officials described the attack as highly significant, with one of them warning that it could drive Moscow to a far more severe negotiating position in peace talks to end the war. On Wednesday, Russian President Vladimir Putin told U.S. President Donald Trump in a telephone conversation that Moscow would have to respond to both the drone attack as well as a deadly bridge bombing that Russia blamed on Kyiv. Ukraine has not commented on the bridge attacks, but has taken responsibility for Sunday's attack on Russian airfields. The Kremlin said Trump told Putin that Washington was not informed in advance of the Ukrainian attacks. Trump, meanwhile, described Wednesday's conversation with Putin as good, but added it was, quote, not a conversation that will lead to immediate peace.
Вони готові до обмінів, бо це їм потрібно.
Earlier on Wednesday, Ukrainian President Volodymyr Zelensky proposed implementing a ceasefire until such time as a meeting can be arranged with Putin. But Putin questioned the point of peace talks with Ukraine after accusing it of ordering the bombing of bridges, which he called terrorist attacks, and some of his most hawkish remarks on the outlook for peace.
The attack was clearly aimed at civilians. This fact confirms our concerns that the already illegitimate regime in Kyiv that once seized power is degenerating into a terrorist organization, and its sponsors are becoming accomplices of terrorists.
Meanwhile, in Brussels, NATO defense ministers met to discuss continued military and strategic support for Ukraine. Kyiv's defense minister said Ukraine's allies voiced willingness to pay for defense manufacturing by Ukrainian companies in allied countries, but did not specify the potential value of the offer.
Take a short break. Now, on the other side, we get you the latest on the Maharashtra contractors threatening a statewide stir. Find out why on the other side. Welcome back. Now, contractors in Maharashtra have threatened a statewide stir over pending dues worth over 80,000 crore rupees. Santya is joining in with more details on this. Santya.
The issue of pending payment between the state government and the Maharashtra Contractors Association has been ongoing for almost a year now. According to Maharashtra's Contractors Association, the last proper payment that was cleared by the state government was in January 2024. According to the association, a small installment was cleared by the state government in March this year, but that was of hardly 900 crore rupees and it did not help the members of the association at all. According to the association, till the inception of Ladki Bahan scheme, the payment clearance rate of Maharashtra government was 40%, which dropped to barely 10%. The association has already filed a petition in Bombay High Court against the Rural Development Department over the pending dues. The association claims that if the government will not clear the dues of over 80,000 crore rupees to the association and its members by 10th of June, it will not only start a statewide stir, but it will also file another petition, this time against the PWD. The association claims that out of over 80,000 crore rupees of pending dues, 38,000 crore rupees, that is around 50%, that's the pendency of PWD. There are over 3 lakh members of the association across Maharashtra. The members of the association, they claim that they tried to speak to the Chief Minister and the Deputy Chief Minister on multiple occasions. They claim that they wrote at least 6 letters to the Chief Minister and the Deputy Chief Ministers, but did not get proper response. The members of Maharashtra Contractors Association claim that they halted all the key infrastructure projects in the state in the month of February. The state government is yet to comment on the issue.
Santya, thanks a lot for that important update there. Now, Royal Challengers Bengaluru's IPL win celebrations took a tragic turn. 11 people have lost their lives and several have been injured in a stampede outside the Chinnaswamy Stadium after RCB fans gathered there to celebrate the franchisee's first ever IPL championship. The injured were admitted at nearby hospitals. It was a sea of red outside the Karnataka State Assembly where the government felicitated the team. The Karnataka High Court took up the case on its own and the matter will be heard in the afternoon today. With that, we call time on this edition of Business Lunch. The market continues to cool off from the highs, but is still trading with gains up 150 points. Midcap Radar on the other side.